Hello dear students, welcome to Devika's Commerce and Management Academy. Today new chapter we are going to see, that is working capital management. I know many students are waiting for this chapter. Capital, it is one of the important aspect for every organization. So if capital is properly managed, properly accumulated, properly utilized, then automatically companies activities, you can say, it is going very well. Now capital is divided into two parts. One is fixed capital and working capital. Fixed capital means the capital, whatever we have accumulated, whatever we have received capital, that we are investing in any investments, fixed investments, fixed assets. That's called as fixed capital. For example, purchasing a building, purchasing machinery, purchasing a premises, open plot, something which is permanent for the organization, that is fixed capital. Whereas second one is working capital. Working capital is not in that way, no fixed. Working capital means for working organization, day-to-day activities. Daily we wanted to purchase something, we want to buy material, we want to pay for advertisement, we want to pay the wages, daily wages, and cartage or otherwise transportation. All small petty transactions, we can use this capital. That is why we say it as a working capital. Working capital is flexible. It can be changing. 1 month or 1 week it will be more, sometimes it will be less. That kind of flexibility is there in working capital, whereas in fixed capital it's not like that. Once you want to buy something, you have to invest more. Whereas here, need not to. Okay, in depth we are going to see what is working capital, and later on we are going to work out the problems also. Okay, now what is working capital? Main objectives, if you see, objectives of working capital, first thing is that maintain sufficient funds. Company has to maintain working capital, fixed capital, both together. As I told you, fixed capital is to purchase the assets, and working capital is to purchase any small transactions. If sufficient funds are not there, then it will become a problem. Though company is having a lots of investment and MNC company, but working capital is poor, very difficult to manage. That is why sufficient funds you have to maintain. This is the main object of working capital. Second thing is the proper allocation of resources. Resources, whatever we have resources, whatever we wanted to spend, everything is properly, we can allocate it. Need not to worry about fixed. We have to worry about daily wise transactions only. What are the payments? Daily wise payments. Further, do we have the funds or not? Use it properly and account it properly. So this is proper allocation of resources. In the same way, proper management of current assets. Proper management of current assets. Current assets means, current assets. We have studied in final accounts, all current assets. Current assets are cash in hand, cash at bank, carry on. Cash in hand, cash at bank, sundry debtors, bills receivable, okay, and any kind of asset which can be easily transformed, which can be easily converted into cash is current assets. Right, that's current asset. Now when we talk about current assets, you must understand it is having a liquidity position. It is having liquidity quality, means easily you can convert it. Now here working capital means we are going to focus mainly on the current assets only, not the fixed assets, as we have discussed initially beginning of this chapter. Right, now here proper management of current assets, this is also one of the object. Current assets, cash in hand, how much we have to keep, how much should be the bank balance, and who are the debtors, how much we can go for credit sales, that is debtors, sundry debtors, right? So in that way, properly managing the current assets is also one of the important object of the working capital. In the same way, balance between current assets and current liabilities. Why to balance between current assets and current liabilities? We know what are the current assets, we know what are the current liabilities. Current assets means, just now I told you. Current liabilities means the liabilities which has to pay within 1 year. We have to pay in a short period. What are the current liabilities? Yes, sundry creditors and also bills payable and outstanding wages, any kind of as liabilities which has to pay within 1 year quickly, how to pay, that is current liabilities. Bank overdraft is also current liability. We are saying that balance between current assets and current liabilities, this is one of the objective. Why to balance? Suppose we have current assets of say 50,000, 50k we have current assets, and whereas we have current liabilities of 25k, current liabilities are 25k and current assets are 50k. If this is the case, you can say we are able to balance, we are balancing the current assets and current liabilities. How? Current assets 50k, current liabilities 25k. Current liabilities we have to pay quickly, we will not delay it. So how do we pay this 25k? From 50k only. From 50k, from current assets we are going to pay the current liabilities. 25 only current liabilities, whereas current assets are 50k. I have enough funds, I can pay. So in such case, you can say balance is there between the current assets and current liabilities. Suppose say this is also 50k. Current assets are 50k, current liabilities are 50k. Entire current assets are gone to pay the current liabilities. No balance, not maintaining properly. Sometimes current liabilities are assumed at 70k, whereas current assets are 50k only. 50k you have to pay it, still 20k is there, then company is not maintaining properly. So that is why you have to be very careful. Balance between the current assets and current liabilities is one of the important objective. Next one, so these are the objectives of working capital. Next, we can discuss about components of working capital. In working capital, what do we have? Current assets and current liabilities, only these two. Able to understand? Current assets and current liabilities components. What are there in working capital means current assets and current liabilities. What are current assets? We know. Just now discussed. What are current liabilities are? Also we know. Managing both current assets and current liabilities is nothing but the working capital only. In fact, there are different types of working capital we are going to discuss. There you will come to know what is working capital, what is gross working capital, what is net working capital, and different types of, apart from gross working capital, net working capital, there are many working capitals also there. Let me tell you one thing, gross working capital. Gross working capital means that capital, so which is just like assets, current assets only. For current assets point of view, whatever you have kept to the investment, that is gross working capital. Shall I repeat it? For current assets point of view, for handling the current assets point of view, whatever investment you kept, that is gross working capital. Net working capital, there is another net working capital. Net working capital means the excess of current liabilities over the current assets. Sorry, I think I reversed it. The excess of current assets over the current liabilities. Excess of current assets, excess how much it is? 25k excess over the current liabilities. If you have more current assets, then that is net working capital. Now here what is the net working capital? 50 minus 25, it is 25. If you are confusing, I will change the figure. So this is 30k. So excess of current assets over the current liabilities is the net working capital. How much excess is there? Current assets 20. 50 minus 30 comes to 20, right? 20 is the 20k is the net working capital. Are you able to understand? Okay. Now anyway, right now you remember that working capital is based on the two components, current assets and current liabilities. Current assets and current liabilities. We have to manage it properly. What is gross working capital? What is net working capital? Also I told you. Gross working capital means on working capital, whatever you kept the investment, that is gross working capital. Here you can say 50k is gross working capital. Would you agree? 50k is the gross working capital. What is net working capital? Excess of current assets over the current liabilities. How much excess is there? 20k is the excess. That is net working capital. Now let's see characteristics of working capital. What are the main characteristics? I'll go a little bit fast. First thing is that short-term needs. Current assets means only current assets, or the working capital means especially this is required for the day-to-day transactions. So that is why always for short-term needs it is important. I want to pay to the workers wages. I cannot delay it. And transportation charges I want to pay. Yes, I want to buy raw material for the working process. I have to. So these are all short period transactions. So short term needs point of view, working capital is important. This is one character. Second one is the circular movement. This working capital should be always have the movement, continuous movement. Paid, over, next, and from where we are doing it, all these transactions circularly it is going to move. So this will be seeing in the next class in depth also. Anyway, circular movement means it has to circular, it has to move. And element of permanency. Here one important thing is the element of permanency means whenever you have some kind of transactions, these are permanent. So wages, every month you have to pay wages, transportation also. So such kind of permanent, but it is nature of regular payment. So this kind of transactions you have to be careful, you have to handle it. In the same way, element of fluctuation is also another important character. Fluctuations are common, working capital. Fixed capital, no, but in working capital fluctuations are quite common. So you have to remember the element of fluctuation. It's not permanent. Suppose say this time you have paid for the transportation some amount, next time it will be changing, every time it will be changing unless you fixed it, right? Advertisement also, advertisement, transportation, wages, purchasing the material. Purchasing material also always fluctuating. Why it is fluctuating? Prices, sometimes prices are down, sometimes prices are up. So that is also one of the main reason, fluctuation. Okay, element of fluctuation. And also remember another quality is that character is liquidity. Liquidity. This current assets are easily convertible into cash. So this is another important. Easily you have to convert it. So that quality, and less risky also. For working capital, we always invest less amount, which can be manageable for the day-to-day transactions. We don't invest much, so there is no risk at all. When we have some transactions, when we have to make some payment, then only we will do, otherwise it is not required. So it is less risky also. These are the main characteristics of working capital. Did you follow up to here? Next we will see the classification. Classification of working capital, you can say, are types of working capital. Easy to remember. Now I'll make you to understand in 5 minutes. Types of working capital is mainly two types. One is on the basis of concept, on the basis of time. As per the concept, first type, as per the time, on the basis of time. Let's focus first on the concept. On basis of concept, we have two working capital. One is gross working capital, another one is net working capital. Gross working capital, just now I told you, whatever you have invested amount for the current assets point of view, that is gross working capital. Now here, as I told you, 50k is the gross working capital. Second one is on the basis of concept, net working capital. Net working capital means excess of current assets over the current liabilities. Whatever excess you have over the current liabilities, that is net working capital. Here current assets we have 50k, current liabilities are 30k. How much excess is there in current assets? 20,000 extra compared to this 30,000. So 20,000 is the net working capital. Just now I told you this is net working capital. Only 2 points you have to remember on the basis of concept. Gross working capital, net working capital. What is gross working capital? 50k. What is net working capital? 20k. Now on the basis of time, let's focus on this. This is over. Only two concepts. on the basis of time, based on the time or period, we have two concepts. One is permanent fixed working capital or fixed working capital. Any word you can use, both are same, meaning is same. So permanent or fixed working capital. Second one is temporary or variable working capital. So this permanent and temporary once again divided into two parts. So let's focus permanent fixed working capital, permanent or fixed working capital. Permanent or fixed working capital means that capital is permanent, though it is used for the daily wise transactions, day-to-day transactions, but those expenses are almost permanent of nature unless you find some kind of changes, otherwise it won't change, but it is used for the regular base transactions. Okay, so this can be divided into two parts. One is regular working capital. Regular working capital means regular usage point of view, you are using this working capital, regular working capital. Here minimum level you have to maintain for regular base. Say my organization is very big organization. For working capital point of view, at least I expect 5 lakh rupees to be kept it aside. Minimum balance of 5 lakh. 5 lakh. This is for regular working capital. Whereas the second one under the permanent, 5 lakh minimum I wanted to keep. This is under the permanent or fixed working capital. So regularly I am keeping 5 lakh rupees. Second one is reserve working capital. Reserve working capital means this is excess on regular working capital. Same example, 5 lakh I kept, but I am using it only 2 lakh or 3 lakh only. The rest of the excess, if I am using 3 lakh out of 5 lakh, 2 lakh is extra. The 2 lakh you can say it as a reserve working capital. Not using it, but tomorrow you may require it. So that is reserve working capital. Am I clear about this? Permanent or fixed working capital divided in two parts. One is regular, second one is reserve working capital. Whereas the second one, temporary variable working capital, temporary, everything is temporary. It will not accept only one method of payment. Always it will be changing. For example, if you see working capital, sometimes you need very less because of strike, because of calamity, or because of changes in the market, technology is changing, there is no demand for our product, then in such case, that case we can say it as a lean period. So especially at that lean period, you need less working capital. Less working capital. Whereas on the contrary, there is a boom. There is a lots of demand for our product. For example, somebody said that if you eat garlic, so it is good for health, like Baba Ramdev, or somebody said that eat daily at least 5 garlic pieces, then entire world is going to attack on the garlic. So that is unexpected. So that is what we are talking about, temporary variable capital. Temporary working capital, or you can say it as variable working capital. Means fluctuations are possible. There is no permanent. Here we are expecting some permanent nature, but here it is not like that. Fluctuations. So this also you can divide in two parts. One is seasonal working capital, special working capital. As I said, seasonal working capital. According to season, you have a demand, lots of demand. Ours is the umbrellas manufacturing company, or ours is the AC manufacturing company. AC manufacturing means summer there is a lots of demand you will find. Umbrellas, rainy season, you will have a demand, seasonal. Okay, that's what seasonal working capital. It is fluctuating. During the peak period, you will have lots of demand, so working capital is more required. When lean period, no demand at all, less working capital is required, so fluctuations are possible. And whereas special working capital, unexpectedly some changes happened. Say there is a lots of boom for our product and many people wanted to buy it because of our product speciality, or as I said, Baba Ramdev said that go and buy, eat daily 5 garlic, means you imagine 140 crores of Indian population, when they are going to attack on such kind of products automatically, that is unexpected special working capital. In such cases, if our product are getting any such kind of unexpected boom, unexpected demand, then that is called a special working capital. Let me give you a recap, very easy to remember. What is working capital means you understood. Okay, working capital is for daily wise transactions. We have discussed about objectives and components are current assets and current liabilities, and characteristics we have seen. Then after that, types of working capital, two types. One is on the basis of concept. Am I going fast? Okay. One is on the basis of concept, on the basis of time. On the basis of concept, gross working capital and net working capital. On the basis of time, two, permanent and temporary, or you can say it a fixed and variable working capital. Permanent also divided into two parts. One is regular working capital and another one is reserve working capital. Regular, reserve. Regular means we keep some amount, minimum amount. So there, excess of this, we call it as a reserve. Okay, that's reserve. Not using it, future we may require it. And a temporary is seasonal and a special working capital. Hope I am clear. Take a screenshot. Understood? Stay connected. I'll go in depth of this working capital management. Problems are there, theory is also there. You have to be perfect, 100%. It's my duty. And what is your duty? Please share these videos. And also study well in advance. Have the concept. Before exam, just revise it. Stay connected. Good luck.